I'm Jessica Weaver, host of You Know It, Women Behind the Millions, and wealth advisor, founder of The Wealth Boutique. And we've had so much going on with the new taxes, the new tax code. So what's really happening, and especially when it comes to Social Security. So the big thing that they wanted to push was no more taxing Social Security benefits. Because when you think about it, you pay tax money to receive your Social Security benefits. And now they've been taxing those Social Security benefits. So they basically tax the tax, right? So what really happened, what transpired, and what should you be expecting if you are receiving Social Security benefits right now? So they did not get rid of taxing Social Security benefits. What they did was they increased the standard deductions for people over age 65. Now remember, you can take Social Security benefits at age 62. You can take them at age 60 if you are a widow or widower. So if you're a surviving spouse, you can take them as early as 60. So this won't apply to you until you hit 65. Okay? So they increased the standard deductions for everybody by $750. So if you are single, your new standard deduction is $15,750. If you are married, $31,500. Now they've added an extra $2,000 of a deduction if you're over 65 and single, with $3,200 if you are married over 65. So the total deduction, if you are age 65, is $23,750. If you are married, it is $46,700. Okay? Now, what's the real problem here? They really didn't get to the crux of the issues with Social Security. They put together these income limits, and I'm going to pull them up here. Let's see. How can I get these up here? Aha, here we go. All right, here we can see them. Beautiful. Okay, so these have been in here for decades. And these numbers have not increased with inflation. And that's the biggest thing. I wish they could have increased these with inflation, added an inflation component to the new tax code. All right, so what this is saying, if you are single and you earn under $25,000, 0% of your Social Security benefits are taxed. Now, with baby boomers, so much of their money is in pre-tax 401ks, IRAs. When they hit RMD age, when they have to take out the required minimum distributions, they're going to earn way over. They're going to have to pull out way more than $25,000. So they're going to skyrocket way into that more than $34,000. Okay? So if they earn between $25,000 and $34,000, half of their Social Security benefits will get added to their ordinary income and get taxed. Right? The tax isn't 50%. It gets added to their ordinary income, and then they'll see what tax bracket they're at. If they earn more than $34,000, up to 85% of their Social Security will get added to their ordinary income and get taxed at that current tax bracket. If you're married, they go up a little bit. They go up to $32,000. 0% of your Social Security benefits will get taxed. Between $32,000 and $44,000, up to half of your Social Security benefits will get taxed. If you earn more than $44,000 as a married couple, 85% of your Social Security benefits will get taxed at that marginal tax rate. These numbers haven't changed in decades. There's no inflation to these, which is very hard, and they probably aren't going to change. They haven't changed in a very long time. Or two. Okay? So what did they do here? Well, they gave you a little bit more of a deduction that's going to lower your ordinary income. And they're calculating this is going to help 88% of retirees to not owe money on Social Security. Is that true? I don't think they took into account the trillions of dollars that are in pre-tax retirement accounts for future RMD owners. So this isn't what we're seeing. We're not seeing 88% of our retirees not paying Social Security, tax on Social Security benefits. We're seeing the opposite. Most of them are because, especially if you're in New Jersey, you're in a high earning state, you have a lot of assets. It costs, you can't live off of $25,000, let's be honest. Okay? But there are ways, that you can get to a 0% tax rate there are. And this is what we're going to talk about next. So a lot of people we meet with, they say, and I see if I can get rid of this now. If I'm done, stop sharing. There we go. Okay. So if you are, like a lot of people that come to us, like, I'm going to wait to take my required minimum distributions until I'm at that age, 73 or 75, because I'm going to pay tax on the money when I take it out. So I'd rather delay the taxes, thinking I'll end up paying a lot less in taxes. Okay. What we found, we have this amazing innovative technology that will show you if you wait to take money out of your IRAs, 401ks pre-tax, this is not pre-recorded, I see you, and wait until your RMD age to take the money out versus taking out a smaller fixed amount over the years leading up to your RMD age and then through RMD age. You will pay, on average, about half the amount of taxes. So we just saved you 50% of tax money. So let's say you're paying, and this is not astronomical, this is reality, you're probably going to pay, $300,000-$500,000 on taxes by waiting till RMD age, depending on your account size. You'll pay half of that. So let's say you're saving $250,000 by taking money out more strategically than just delaying it. This is why you work with us. This is why you don't just go and rely on what you see on the internet. Now, another way to get to that 0% tax bracket, we see people saving on average, it could be $150,000 to over $2 million in taxes by starting to convert money into a Roth. You have to do it right, though, because there are a lot of wild cards here. We have the IRMAA cliff, which is the income-related modified adjusted amounts for Medicare premiums. So as your income goes up, your Medicare premiums go up. We have those Social Security tax brackets that we just showed, too. So we, again, plug it into the system to see if we were to convert money over 1 year versus 10 years, what's the difference that we're going to pay in tax money and Social Security taxes and also in Medicare premiums. And it could be a difference of half, saving half of it by doing it over a certain number of years for it too. So there is ways to lower the amount that you're going to pay in taxes. Save that tax money or get to that 0% tax bracket. And that's the work that we do here at the Wealth Boutique. We've been doing this with all of our client reviews over the last year. I just did it with a couple in their late 30s. Yes, we are that proactive in getting this done. So reach out to us at the Wealth Boutique. If you're curious, DM us. We are here to help you navigate the changes in the taxes and how can we proactively get you saving that tax money. Because I'm guessing if it's a difference of $1 million, would you and your beneficiaries rather have that money or the IRS? That is your choice. That is your choice by being proactive or just sitting and doing what you currently are doing. It's a big number, right? It's usually around that 7-figure number. All right. And tomorrow we have a new episode. We have Women Behind the Millions coming up. We have an incredible season. We have these divine disruptors, and then we're rolling right into our newest season of Financial Trendsetters, Thursdays at 7 p.m. Eastern Standard Time on E360. We'll see you there. Women Behind the Millions. All right. Take care, everybody.